Good afternoon. This is Keith Brown in Moultrie, Georgia with some cash commodity commentary for Wednesday. It's about 3:15 Eastern Time. Had some mixed markets today, so we'll get right to them. Cotton traded significantly higher, although the word significantly implies a lot. But I guess significant in terms of where it finished. The spot in March stayed above, closed above 7,700. And the way out December closed above 7,900. Well, right away you understand the correlation of that. New crop December is knocking on 80 cents, and of course nearby spot cash cotton could run up and try out its summer high, which was around 78.05. So some interesting developments on that, and we'll see if the market's going to continue to trade on up a little bit. I think it certainly might. We have export numbers, I think, coming out on Friday because of the Christmas holiday. And of course, that's been the driver. As you know, the USDA lowered the U.S. crop, and raised the U.S. exports. That in turn lowered our carryout from 400,000 bales. And of course, in the world, they also were a little bit bullish on those numbers. They made some provisions to the Turkish supply and then raised Chinese imports. So all that's coming to bear a little fruit, I guess, for the cotton market. Over in the grains, not as pretty. Corn down double digits today, down about 10 cents, both in old and new crop corn. Just seems the corn cannot get away from this demand destruction. There's just we continue to see that demand for corn is just not there. I think weekly inspections, export inspections came out today. They were below last week, which was below the week before that, and below the week before that. So despite the fact that we've dropped significantly in corn, we're just continuing to see the market not be able to overcome its demand destruction aspect. Now there's a big number coming out January the 11th, which is a stocks number that's supposedly to be bullish, but can it really be that simple? So we're a little concerned about that, and we're going to be talking to some of our clients into corn about some positions maybe to hedge themselves. Beans today were down. South American crop is starting to loom a little bigger. Weather down there, of course, hard to gauge in this country, frankly, but reports suggest that the crop there is definitely showing some improvement, and China may be switching pretty soon to South American origin beans, although those beans are not gathered till February and March, but just something to keep in mind. Wheat today took another hit based on the weather in the Midwest. A lot of snow, a lot of rain, but nothing of a drought-busting nature, so we're not too thinking that situation's over. And part of this, of course, is year-end liquidation. We have the fiscal cliff. Nobody knows what to do. These funds are wanting to just get to the sidelines, I think, as much as anything. So I'm not so sure that we may have the tops in these grain markets, but I don't know that we can't go back and revisit better levels than this. As a matter of fact, I think that we can do that. Let's see what tomorrow brings. Have any questions or comments? Give us a call, 1-800-910-1910. Thanks for listening.